This is your LMAX Exchange technical update for Friday, December 16th, 2016. Euro dollar. So the euro is finally broken down below that critical 2015 base at 104.63, and this does potentially set the stage for the next major downside extension in this market towards a measured move that takes us down below parity into the 95 area. Right now, next key support comes in at 103.45. That's the low going all the way back to 1997, and that low is representative of an internal support going back to 1997 in August of 1997. At this point, it would take a break back above the monthly high at 108.75 to take the immediate pressure off the downside. Sterling dollar. So cable remains confined to a downtrend after the market stalled out ahead of 128, which was a previous base and critical resistance. The market now could be poised for the next major downside extension towards a retest of the 31-year low down around and just under 120. And at this point, it would take a break back above 128 to suggest that the market's putting in a more significant structural shift. Dollar yen. So dollar yen continues with its surge, and the market now is approaching critical psychological barriers at 120, which also happened to coincide with a key 78.6 fib retracement off the multi-year high that we saw at 125.85 in 2015 down to that 2016 low at 99. So if the market does continue over the coming sessions higher towards 120, it could look for some critical resistance and start to stall out there, at least for a short-term correction as it unwinds from overbought studies. Euro Swiss. So Euro Swiss is broken down through below a multi-week range that was in place between 108 and 110, and this puts the focus here now on a retest of the 2016 low at 106.24. Aussie dollar. So Aussie remains confined to downside pressure, with the market most recently stalling out ahead of 76 and rolling back over. At this point, the focus now is on a retest of medium-term support, which comes in at 71.45. Dollar CAD. So dollar CAD uptrend remains firmly intact, and although we did see a significant pullback in recent trade, the market is adhered to the uptrend, looking to put in a higher low now above 130 at that recent low that we saw at 130.81, ahead of the next major upside extension beyond 135.89 and towards 140 further up. Kiwi dollar. So Kiwi remains confined to downside pressure as well, with the market adhering to lower tops since putting in a 2016 peak at 74.86, and now the focus is on a break below next key medium-term support at 69.52, which should expose the 65 area further down. SPX 500. The S&P 500 is consolidating just off its recent record high this week, just shy of 2,300, and the market could be poised for the next major upside extension through 2,300 and towards eventually 24 and 2,500 further up, with this market unwavering in its commitment to trade higher. We would need to see a break back below 2180 at a minimum to take the immediate pressure off the downside, off the top side. Gold. So gold is broken down below some critical internal support, which came in the 1130 area, and this does open the door for the possibility of the market retesting that 2015 critical multi-year base around 1146. At this point, though, the market is also coming to some support here in the 1120 area, which is representative of that 78.6 fib retracement off of the 2015 low to 2016 high at 1375 move. It's also worth noting that daily studies are oversold, but again, at this point now, we need to see a break back above the weekly high that comes in around 1165 to take the immediate pressure off the downside.